Hi guys, welcome back to Trademanza's weekly educational videos. In these videos, we bring to you interesting things about the Indian stock market, such as the companies listed on the market and their business model, and also interesting trading strategies which you can use to profit off bull and bear markets both. So after a long hiatus, we're back with one of our interesting educational videos. Do subscribe to our channel, switch on notifications and like our videos, and also download our app to try out our fun games and quizzes. Now, as you remember from our previous videos, in these educational videos, in each week, we've been teaching you how you can use one indicator. And we've covered indicators such as the RSI, the MACD, and the Bollinger Band. So today I have very interesting indicators for you, such as the ADX. Now, what is the ADX? As you can see here from the name, the ADX represents the average directional index. Now, this is not an indicator which can be used by itself, but this is a type of indicator which is actually combined with other indicators to use very effectively. But in today's video, I'm just going to cover what the basics of this indicator are and how you should interpret it. So as we can see here, the ADX is just one single line and it stands for the average directional index. What this does is it tells us the strength of the trend in a market. The values you can see here range from 0 to 50. Now, by telling us the strength of the trend in the market, what I mean is that usually how this indicator is used, that if the value over here goes above 20, we can see that a trending move is about to begin and we would look for some sort of trend following strategies. So this indicator actually works best when it is used along with some other indicators such as moving averages. But the very tricky thing about this indicator is that, like I said, it's just a directional indicator and it tells us the strength of a trend. It doesn't really tell us whether to go short or long, whether there's going to be an up move or a down move. The best example for that here is if we can see this big up move over here, right? So over here the ADX is at 22, and as soon as the ADX starts moving up, we see a very big up move, indicating that the strength of this trend is very strong. Now what happens after that is, for the part where there is no up move, where there's a pause, because trends never really go up in a straight line. Sometimes there's a pullback or sometimes there's a pause and there's a small consolidation like this. What's going to happen is that the ADX is going to completely fall. What it's trying to tell you that the trend has lost its strength. But as we can see here again, the value comes back down, and as soon as the value starts going above 20 again, here we see another up move. But the interesting thing is this doesn't apply only to up moves. If we look at this part here, we can see that for this much of a region, Nifty was pretty much in a zone and it wasn't really giving any trending moves. So the ADX was flat as well. But as soon as Nifty gave us a good down move here and a good up move here, we can see that there was a spike in the ADX. So the ADX is not going to tell you whether to go long or whether to go short. The ADX is just going to tell you when a trend has emerged in the market, and it's like a sort of reminder that now it's time to start switching to some trend following strategies. So you can incorporate some sort of moving average or RSI and other strategies. Now, apart from the ADX, if the ADX itself is not enough for you, like I already mentioned, one thing which can be done is it can be combined with some moving averages. So here I'm going to go and I'm going to add a moving average, and that is right here. Okay. So now I'm going to make it, because it's an intraday trade, I'm going to make it a 20-day moving average. Let me just make the line a bit thicker here. Let me make it a red line. And yeah. So as we can see here, as soon as we start seeing a spike in the ADX, what one can do is one can go long using the moving average as their stop loss, as a trailing stop loss. So as soon as we see a spike here, we can see that the price is also crossed above the moving average and it's time to go long. And once we go long, what we would see here is that the ADX is still going up and the price retests once, but it takes support before even touching the moving average and continues going up. So here what one can do is that as long as the ADX line is in an uptrend, one can just hold the trend without any worries. And once we start seeing the ADX go down, that is when you would place your stop loss just slightly below the moving average. In this case, you would get taken out here just before another up move. But that's how strategies work. You have to make some sort of rules and then stick to them without any sort of exceptions. Now, the other way to use the ADX indicator is that there is a different version of it, which is called the directional movement index, right? So I'm going to remove this here. Okay. And as you can see, this is the directional movement index, right? Now this is looking a little messy. You can change the colors to make it fit your strategy. But the red line you see in this case is the exact same ADX line which we saw before. And this red line is sort of like a sell signal, whereas the blue line is a buy signal. So what one should look for is basically once the ADX has gone up above 20 and the blue line is above the yellow line, which is the sell signal. Basically, treat these two like MACD lines. Once the blue line crosses the orange line and the ADX is also of the 20, that can be taken as a buy signal. And like this is the buy trigger, the crossover of the blue line above the orange line. And the red line is to tell you the strength of the trend. And you can combine this with your moving average to get a stop loss. Actually, this is one of the most used indicators out there, because you can see by using this one single indicator and moving average, you will cover all aspects of your trade. You will have your buy or sell signal based on the crossover of this line. You will also have an idea about the strength of the trend based on the value of the ADX, and you have your moving average here as the perfect stop loss. The other way this can be used is the exact opposite, which is in this case, we see in this big down move, the orange line here itself, it has crossed up above the blue line, and then we see a spike in the ADX, and the ADX starting to go below 20. If we look at this region here, this is where it happens properly, right? The yellow line and the blue line converge properly, diverge properly, and the red line also starts going up, indicating that the strength of the trend is picking up. And that is when within 20 minutes we got such a big move. So guys, the two indicators covered, basically we just covered one indicator, which is the ADX. This is just an advanced version of the ADX, which also incorporates a buying and selling signal in the trade as well. That's it for today. Stay tuned to our channel for more interesting videos such as these, and also like our videos, subscribe to our channel, and switch on notifications.